What is up, ladies and gentlemen? It's your boy Cain Ruiz back with another Gucci made video. Let's get it. Now, before we hop into today's video, guys, which is top 3 stocks to buy for each different type of investor, you got dividend, you got growth, and you got your traders. Now, before we hop into it, please hit that like button for that YouTube algorithm. Please be notified so you can buy certain stocks at the time that I can buy them. We do come out with videos Tuesdays and Saturdays. This week we'll have a bonus video because I'm feeling generous. But make sure you hit that subscribe button and that YouTube to help that YouTube algorithm. Hit that like button for the same thing and hit that bell notification. So before we get into it, top 3 stocks that are a buy, and one I'm going in heavy in on margin. I'm gonna explain why. So our first stock is obviously going to be our growth stock. Now our growth stock is Apple. Apple's definitely always going to be a buy. They got their first 100 billion quarter. I always hold Apple, always held Apple. Apple is a great company. Not only do they have massive growth over 76% last year. Look at the 5-year chart, you're looking at 470%. In the past 5 years, Apple went up 470%. Ladies and gentlemen, that's crazy growth stock. I think Apple's a great company, very, very diverse company. And I'm hoping to see a lot more action from Apple. Currently, their dividend is, it has a dividend, but its dividend's still a little bit low, but it's a good, fast growth, has a 70% buy on the analysis ratings. Apple's Mac, iPad sales bolstered by work from home trend, 5G phones well positioned to growth. You're looking at fair value, $85. I'm not going to say that's $85 a fair value. Apple at an $85 fair value right now, that's kind of crazy, but it is trading kind of high, and we are hitting record highs. So with that being said, be careful. I would probably buy this stock if it comes down after earnings, because a lot of people will sell off because they ride earnings before, and then but the day before earnings hits, usually a whole bunch of sell-offs or a lot of stuff. So if you're looking to pump and dump this stock, buy now and then sell it off before July 27th. So sell it July 26th. I can't really say that much about Apple. Apple's a great around company, awesome balance sheet, amazing balance sheet. Look at the growth. Look how much I made, almost 60% off this company. Not only that, I made tons of more money. We can go to my market sales. My recent market sales, look, 4,000, 1,000, 1,000, 1,000. So I had tons of money in here in Apple when I started out, and it's time to diverse that. Too big of a nest egg. So right there is our growth stock that I would hold, and I would be speculative about it. One more stock that I'm looking at for a dividend stock. These are for your dividend investors, people who like to just receive that net cash flow rather it be every month or every 3 months, quarterly. To get that cash flow is nice. I think AT&T is a great buy right now. Obviously, you see my pending dividend. I have 32 shares. They pay 52 shares. 52 cents per share. My bad. They pay 52 cents per share. And I have 32 shares, and they're paying me a total of $16.93. That's money just given to me. Obviously, I'm down $285, but this is a good time where I can build my position and lower that average cost down. When you see your certain stocks in your portfolio go down, If you believe in them long term, or you have reasons of buying that stock, hold true to your value and average your cost down. Obviously, I'm not really averaging my cost down right now to AT&T. I'm not really looking for more dividend income. I'm looking for more growth, fast growth. So with that being said, let's get into the big boy. Now, my big boy right here, Alibaba, obviously for the past week it's been up 3.34%, the past month 1%. But if you look at the past 3 months, it's still down $51, still down 61%. Now, the reason why it went down, Jack Ma's been missing. Well, he went missing, now he's found. Stuff he said about China, stuff about the Ant Group, and the U.S. delisting Alibaba off the New York Stock Exchange. That was the hype, so that's why the bears were winning that one at 16% down. I signal this as a buy. Obviously, you're seeing recovery. Recovery, because once you hit that 222, go up, come back down, 227, 240, go back down, 226, 236, 235. Yep, you've just seen it's gonna go back up. And not to mention, ladies and gentlemen, their earnings call is on February 2nd. So I'm gonna ride earnings out to this. Fair value right now, off of the research off of Morningstar, it's saying it's a $296 fair value, and it's at $258 right now. So really, guys, there's like $32, $34 profit you can ride per share. Now, I'm currently trying to buy 49 shares of Alibaba, and if I can at least sell it back to the price it was before, we'll say 309, right around that area, 309, 307. Let's go 309. If we sell around the 309 area with 49 shares at 258.35 as the execution price that we want to get it for, I'm looking at 50 shares, and I'll still keep my one. I'm sure I'll still keep a couple extra shares. I'm gonna ride it out. I'll get an extra $2,000. I'll be happy for that month. But Alibaba, I think, is just right now, it's just been beaten down. It's a cheap stock. It's cheap right now. Look, it was at 220 before, back, when COVID was coming out, and the lowest it reached was 180. You're talking about, and that's, okay, not 180, 176. You're talking 19% down. So you're talking about 19% down during a pandemic, and then it rode that pandemic out. It literally rode the pandemic out. And you're looking at August at 256. So so if, the pandemic happens, the stock can still get hit. Yeah, it was, X amount of money down, but you're still looking at 16% down. So I think Alibaba is a buy. I'm buying it. I'm going to trade it, get my money, put it elsewhere. And then for my bonus stock, we'll throw a bonus stock out there. And I'm telling you guys, this is a banger. Tattooed Chef will go down to there. Tattoo Chef, I think Tattoo Chef is going to be a crazy company. Its market cap is at 1.76 billion. It's literally been doubling every year, and it's looking to double in 2021. And if you're looking at doubling, then you're looking at explosive growth. Literally, they've been listed on September 12th, 2018. Really didn't get no action until June 26, 2020. I don't know why. It's probably a small company, but I would love to buy it at the $10 price. But coming into this, guys, Tattoo Chef's a great company. I believe in it long term. This is a long term buy. This is not a buy and sell. This is not a trade stock. This is a long term buy. I'm gonna hold it for 5 to 10 years, And if it does extraordinary, the company is going to do extraordinary. If not, I'm, only have $500. Looking at adding another 500. I want to get it to 1,000 right now. So I'm going to look for me to add more position into Tattooed Chef. I'm already up 4% on it, $19. Not a big deal, but it's nice. It's nice. The past year has been up 141%. Past 5 years, 155. So this past year has been a explosive stock. Look for it, guys. I'm telling you guys, look for it when it dips. I say right now it's a buy, but I would wait for see if it could dip down possibly back into the $15 range. And if it does, I would buy this stock pretty heavily. Now, that's going to do it for this video. But before you guys go, if you guys want free money, and I do this just to show you guys my affiliate links down below. Sign up with Robinhood. You guys get a free stock. I get a free stock. Sign up with Webull. Deposit your $100. I think you get 2 free stocks. So get your money. Sign up. Invest. Become a winner. Start getting gains like me. You know what I mean? Start getting these big gains right here. Look, past 3 months, 5,000. Past month, $1,574. Past week, $93, $74. You know what I mean? So get this money, guys. Do what you guys need to do. I love you guys. Sign up. Peace.